I'm so excited to introduce to you our next presenter, Rich Checkan. Rich is the president of ASI, Asset Strategies International, and today he is going to be talking to us about gold, fake news, or proven performer. Rich and his company are also major sponsors of this event, so I am very grateful for his help and support. And without sponsorship like Rich and the ASI team, we would not be able to hold such a massive event and share such an important message with the world. So thank you very much, Rich. Back in April, I had the privilege of having Rich on our roundtable emergency webinar, Global Strategies in Light of COVID-19, and our audience went nuts for his presentation. So I just knew I had to have Rich back and speak to us at the summit. So to everyone out there, I highly recommend you check out that presentation, the recordings of which are included in your VIP ticket. If you don't have your VIP ticket, then I encourage you to upgrade right now. Rich has knowledge of every facet of ASI's operations. He has been an integral part of ASI's maturation from a precious metals and foreign exchange dealer to a full-service tangible and rare tangible asset provider, to include rare US, world, and ancient coins. Rich oversees the operations, administrative, sales, and marketing departments, as well as serving as ASI's compliance officer. Please welcome Rich Checkan. Rich, the floor is all yours, sir. Please take it away.
All right. Thank you, Mikkel. I'm so happy to be here. I mean, what we're covering today, I think, is so important. We're going to talk a little bit about gold and whether or not it does its job in times of crisis. And we have just seen a fantastic example of a crisis affecting the entire world, and we get to monitor how well gold did and take a look back and see as well historically, has gold done its job for people in the past? So I'm going to take you to a share screen here. Today, I'm going to cover gold, fake news, or proven performer. And I want to start off with a little bit of a story of a couple clients, Mary and Bob. Mary and Bob were a Jewish couple. They were married a very long time, 50 years. They were coming up on their golden anniversary, and they had never been to the Holy Land in Israel. So they decided for their 50th, they were going to take a 2-week trip. They were going to see all the sites and have a wonderful time in the Holy Land in Israel. And, come time for the trip, they departed. They spent their first week there, and everything went according to plan. It was as good as expected and as advertised. And then before they got into the second week, unfortunately and suddenly, Bob passed away. So Mary is there, the coroner comes on the scene, and he says, after he assessed the situation, he said, Mary, we have two options here. You can have your husband buried in the Holy Land, sacred soil, for $50 US, or we can box him up, put him on a plane, and send him home. And you can bury him in your local neighborhood. And Mary didn't answer right away. Coroner figured, okay, she's distraught. There's a lot to fathom here all at once. But after a little while, he kind of figured we should have had an answer by now. And he pushed her again. He said, "Listen, Mary, I hate to push you. I know this is a tough time, but would you like to have Bob buried here in the Holy Land on sacred soil for $50 US, or do you want to spend $10,000 to have him shipped home?" And she didn't respond again right away. And the coroner's getting a little agitated, and he finally said, "Listen, $50 to bury him here, $10,000 to bury him home, which is going to be, I gotta get moving on this." And she said, "You know what? Go ahead and ship him home." And he was flabbergasted. He didn't understand what was going on. And she said, "Listen, 2,000 years ago, you buried a guy here on sacred soil. 3 days later, he rose from the dead. I just can't take that chance. Let's go ahead and send Bob home." So I raised that little joke for you, if you will, to kind of highlight the fact that we all have important decisions, and many times difficult decisions to make. They're not cut and dried. They're not exactly, they don't always go the way you exactly have planned or have foreseen them to go. And it takes a little bit of research. It takes guidance from smart people, knowledgeable people in certain industries to help you along. So just like Mary, we have some tough times and some tough decisions to make here financially, and I'd like to jump right into that now. So the first thing is, why am I talking to you? Who am I? Who is Asset Strategies International? This company was founded back in 1982. It's a Maryland corporation. My uncle, Michael Checkan, and his partner, Glenn O'Kirsch, formed back in 1982. I joined them in February of 96. We're basically a precious metals dealer, so we buy and sell. We also work with US gold and silver rare coins, buy and sell. We've been known for innovations over the years, introducing precious metals IRAs to individual client accounts, uh, breaking down. For those who are familiar, if you're not, you'll find out by the end of this presentation, taking junk silver and bagging it into manageable $100 face value bags. It was an innovation started by our principals. The push to have platinum and palladium coins and bars for retail investors, not just industrial plates, that was unheard of when they started in this business. And they convinced some people that if you make a market for it, there will be retail buyers, and they were right. And what we're probably most known for is our innovations with the Perth Mint and the Perth Mint certificate and distributor depository online programs. We'll touch on them either later in the presentation or in the future. The one thing that I'm proud of, and the reason that I love working for this company for 26 years, is our focus on customer service. And I'll give you an example a little bit later of what I mean by that. It's not lip service here. We actually love our customers and we love taking care of them. We don't want to trade. We don't want to make a killing on one transaction. We want to make a reasonable profit, helping our clients help themselves for the life of their portfolios. And in many cases, we're working on third generation of original customers. And I think that speaks volumes to how we treat people that come to us. So that's what I'm most proud of. And hopefully you'll see that as time goes on. To start off, I want to talk about asset protection. Now, I know a lot of people are interested in asset protection. They want to make sure that, any sort of foreseeable um, threat to their wealth is managed, foreseen, protected against. A lot of them will look to small Caribbean islands for structures and so forth. That's not something we can help you with. We're not legal advisors, we're not lawyers, and that's not our expertise. But over years, over decades, we found that true asset protection comes from a simple concept we call the three-legged stool. And I think that's easy for you to envision. A one-legged or a two-legged stool don't stand very well on their own, do they? But a three-legged stool has got enough stability where it can hold the test of time. So that three-legged stool, when it comes to your finances, is not to have all of your assets in any one country, in any one currency, or in any one investment or asset class. And I think most people are pretty familiar with the investment portion of that three-legged stool, that leg that talks about not having everything in Google stock, say, or not having everything in gold or dollar, well, not dollars, but real estate, what have you. If one investment goes bad and everything you own is in it, obviously your entire portfolio is done. But a lot of people don't think about one country or jurisdiction, one currency. Um, Especially in the U.S., investors look at the almighty dollar. They realize that it's the world reserve currency, at least for now, and they know that the dollar has been protected over the years through, let's face it, weak but friendly neighbors, north and south, and oceans left and right. And that currency has stood the test of time for a number of decades. Although I do believe it's being tested severely right now. Having all your assets in any one currency, I think, is a big mistake. You need the diversification. If you don't have the diversification, you wouldn't have been able to ride the resurgence of the Swiss franc. Back in the 80s, it was worth, 20 cents, 21 cents for a Swiss franc. Today, it's parity with the dollar. That's a 300% increase in the value just by holding a cash deposit in Swiss francs. So spreading that risk out or that profit potential out into various currencies makes sense. And then country or jurisdiction is another one. If, again, we don't think of those things in the U.S. We don't foresee the U.S. being overrun and, replaced with some other or some other crown authority, government, etc., but it happens all over the world. I'm actually going to talk about an example from the 70s where that happened and illustrates one of the value or one of the reasons you want to own gold. So again, as you look at your portfolio, make sure that you have your risk spread out. Make sure you have your profit potential spread out. Gold. Gold is a part, in my opinion, of every portfolio. Okay. It is oft misunderstood, but is absolutely essential. You will hear, especially when we come through a period like we just did where the US stock market was on a 10-year plus tear, that gold is obsolete, it's not important, it doesn't do its job, it's a relic, it's barbarous, whatever the case might be. I will tell you there is a reason gold has been around for 5,000 years. It's because it does its job. You don't keep things around for 5,000 years, if you even could, unless they're doing their job. And that's the case with gold, and we'll give you some examples of how that's done. But, you know, I've spoken at a lot of conferences, and I used to take kind of a poll at the beginning of the presentation. I'd ask people, how many people believe you should have gold in your portfolio? And virtually every hand would go up, if not every hand. Some people would raise two. Then I'd ask, how many people have gold in your portfolio? And vastly different number of hands. Very few people actually have gold in their portfolio. And oftentimes I find out it's because they don't know how to get started. They're uncomfortable, the fear of the unknown, etc. And they just never had anybody that could walk them down that path. So they all believe they ought to have it, and very few do. And, that's sad. And hopefully I can get to talk to everybody in this world eventually, but at least I have your attention now, and hopefully I can explain why you need gold in your portfolio. One of the reasons you need gold in your portfolio is right here. If you look at Ben Bernanke, he made this statement um, after the financial crisis of 2008 to 2009, when they were trying to flood the market with money. He basically laid out the plan, how they were going to get the economy back on track. And this is a quote: if people feel, emphasis mine, that their financial situation is better because their 401k looks better, emphasis mine, or for whatever reason, their house is worth more, they're more willing to go out and spend. That's going to provide the demand that firms need in order to be willing to hire and invest. That's the game plan. And if you ask him, it worked to perfection. They didn't care if people were wealthy. They didn't care if people's financial situation was better. What they wanted them to do, consumers, you, me, they wanted us to feel that our financial situation was better. They wanted us to feel that our 401k looked better, our house was worth more, etc., because that was enough to fool us into going out and spending money and getting the velocity moving in the economy again. That was the plan. So they didn't care if you were in fact wealthier. That's the least thing that they cared about. All they wanted you to do was feel good so you would spend, and then the economy could start chugging along again. Okay, that's scary to me. Gold doesn't work with smoke and mirrors. It's not about feelings. It is wealth insurance. It is a store store of purchasing power, I call value, with high liquidity for a potential financial crisis that you hope you never have. Okay, once the hurricane hits, you don't want to buy flood insurance. Once your car gets T-boned in an intersection, is not the time to go out shopping for auto insurance. Gold, the best case scenario is to buy it over time, maintain your allocation to your wealth insurance, gold. It will sit there and bore you to tears, but do its job. It will store purchasing power in a very highly liquid form for a potential financial crisis you hope you never have. If you have a crisis, you immediately sell your gold. That's what you do. Again, I'll give you more examples of how this plays out. But you immediately sell your gold, you meet your financial obligation, and then over time, as you are able, you rebuild your allocation to gold as wealth insurance. And for us, again, every situation is different. Every client's portfolio is different. For us, our opinion is you ought to have 10% of your investable assets in gold for that crisis hedge, that wealth insurance, that protection. Um, the reason we come up with that number is through studies that have been done by people far smarter than I, who basically proved that over a variety of currencies with different asset class mixes between stocks and bonds, what they found is a portfolio that has somewhere between 5 and 10%. I think the target number was 8 percent gold in it, performed better overall as a portfolio and with decreased risk. Now, having less gold than that didn't generate the same response. Having more gold than that didn't generate the safe response. And we go with 10% just because the math's easier than 8. Okay, but you can do the math on 8 as well. Again, everybody's situation is different. I like 10% as a nice round figure to allocate to wealth insurance. Measuring stick. Why do we use gold as that wealth insurance? Well, because dollars change value. Okay, now you'll look at the cost of an ounce of gold and you'll say, no, 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 gold's changing value. And it's just not true. We're measuring that gold in dollars, in euro, in pounds, whatever the case. And the value of that gold in dollars, etc., changes all the time. I would submit to you that the value, the purchasing power, what that ounce of gold could get for you in terms of goods and services does not change. What changes is the perceived value of that fiat dollar, euro, pound, yen, etc. So I kind of liken it to this. If the dollar is your measuring stick to measure the value of gold, I liken it to taking a ruler, a 12-inch ruler, and measuring the length of the desk in front of you. Okay. If that ruler is 12 inches, it will take, I don't know, if it's a 6-foot it's going to take 5 of those rulers to measure the length of that desk. If I go back the next day and I have chopped an inch off my ruler, all right, now it's 11 inches, and I measure the length of that desk again, it's going to take more than 5 rulers to measure that desk, because my unit of measure, the ruler, has changed. It has lost value, it has lost size, whatever the case might be. The same thing is happening with your dollars, okay? If today they're worth one thing and next year they're worth something less, it doesn't make sense to use that as your measuring stick. Your measuring stick ought to be gold, because gold over time, when we're measuring value, purchasing power, worth, it has held up well. The most common story that I've been told over the years, I think you may have heard it, but I'll share it with you anyway. Back in Roman times, you could use an ounce of gold and you could buy a new toga, the business suit of the day. Shortly after the turn of the century, early 1900s in the US, you could take $18, the cost of an ounce of gold, and you can buy a nice new business suit. Today, with gold at about $1,700 an ounce, I promise you, you could go out and you could buy with 1 ounce of gold a nice new business suit. What you can't do is take $18 and go out and buy a nice new business suit, because the dollar has lost its purchasing power over time while gold has held its purchasing power. That's why it's your measuring stick of worth. That's why we have everything backwards, measuring things in dollars, etc. And it's why gold is often misunderstood. Present day example, the Dow was on a 10-year run, hit new all-time highs virtually every single day, okay, for a period there. Yet, if we look at the Dow measured in gold, constant value gold, we'll see that the most recent peak did not outperform the post-war peak in the Dow, and it certainly did not perform the dot-com mania the late 90s and early 2000s. We have not seen those levels. That was in fact the peak level of the Dow historically. But if you look in dollar terms, you would think we're making new all-time record highs, and we haven't been. Measured in gold, you can get the true story. So I'm going to walk you through a number of examples of where gold has done its job, where people have reached out to it in terms of times of trouble. Okay, I think a lot of people are familiar with Iran, and this dates back to, I guess about 2018, when the U.S. pulled back on the nuclear deal that was agreed to in 2015, and then reimposed sanctions on Iran for not meeting certain guidelines, as opposed to that deal and other things that the U.S. was looking for to thwart nuclear proliferation. And as a result, the Iranian rial went just in the course of a few months. It went from about 45,000 reals to a dollar, to 100,000 reals to a dollar, and then in a day it went to 110,000 reals to a dollar. So we were in kind of a hyperinflationary environment, where gold in Iran was widely used, primarily for big ticket items. The given as gifts as weddings, used for large purchases, etc. And at that point, people resorted to gold because they couldn't trust their local currency. Their measuring stick was getting smaller day by day. So they turned to gold to go ahead and just do mundane purchases, to pay their rent. The rentors would not accept reals. They wanted you to give them 2 ounces of gold a month, because they knew that that wouldn't lose purchasing power. Common, or a recent example of gold doing its job. Another example, Venezuela and the Venezuelan bolivar under Nicolas Maduro. We have an incredibly oil-rich, resource-rich country in Venezuela that basically was cash poor. And a lot of that had to do to economics mismanagement, repression, corruption of the Maduro government. And they made a lot of bad decisions along the way, and they're still trying to work themselves out of this mess. He's been replaced through election that he doesn't recognize. So we have a dual government um, coexisting and not well in Venezuela right now. But people are turning to gold in that environment to protect themselves. And actually, the leaders, Nicolas Maduro, is looking to gold to protect himself. He figures if he uses his gold, which by the way they're selling off. In just a short time they went to 100 from 150 tons of gold down to 132 tons of gold, and that was in 2008. It was a 75-year low in terms of the amount of gold the country had. But they're selling it off because by doing so, Nicolas Maduro can raise the cash for his administration to survive. He can pay people to provide security, etc. Because I imagine a few people are not happy with him right now. And it gives him the ability, that gold, to hide, survive, and maybe at some point re-emerge onto the scene. So he's using the country's gold in that manner to kind of extend his reign, if you will. In Turkey, if you go back to August 2018, the currency fell 45%. Okay, again, and we're seeing a recurring theme here. This was triggered, I guess externally, you can say it was triggered by U.S. sanctions and problems with trade, et cetera, on steel, aluminum, cars, perfume, tobacco, uh, with the U.S. administration with Donald Trump. However, if you dig a little deeper, a lot of folks will tell you that the problems were internal, and this was a time bomb waiting to happen regardless, with some of the decisions Erdogan made. But the bottom line is they tripled their money supply. Erdogan tripled his money supply in a 3-year time period, and as a result, drove the value of that currency down to virtually nothing. And everybody in the currency crisis locally turned to gold because it was something they can trust. That was a store of value, not a floating puppet of whatever administration was out there. So Turkey, again, similar situation. Zimbabwe, I think a lot of people are probably familiar with what went on in Zimbabwe, which was basically when the British colony of Rhodesia changed hands, and the locals took over and started the country of Zimbabwe. The Zimbabwe dollar replaced the Rhodesian dollar as the currency. And when it first occurred back in the 80s, and they bear with me, when Mugabe, sorry, I was looking for his name. When Mugabe took over, the one Zimbabwe dollar actually cost more than one US dollar. So it had a higher value than a US dollar. But there were a lot of things going on there. They had some issues with food production and loans to farmers and banks failing and things of this nature, plus a number of decisions made internally by that government in terms of changing over from white to black landowners, et cetera. And in the end, we started seeing inflation figures that I don't know that we'll ever see again in our lifetime. I mean, it's unbelievable. In 1986, inflation was at 48% in Zimbabwe. In 1990, it was at 231 million percent, and in 2005 it was at 79.6 billion percent. So during that time frame, our accountant at the time actually took some. We used to give them away at conferences, an example of what could possibly happen to a mismanaged currency, and praying to God that that wouldn't happen to US dollars going forward. But our accountant actually took a bunch of 100 trillion Zimbabwe notes down to Zimbabwe. They were going there on vacation. Obviously, the dollar was king. They could live like kings on a vacation in Zimbabwe at that time, and he could trade dollars, euro freely, and nobody would touch the Zimbabwe notes. You couldn't even buy a pack of gum for 100 trillion Zimbabwe dollars, even though in the 1980s it cost more than a dollar to buy one. Very, very sad state of affairs where you take a country, again, very resource rich, mismanaged, and this happens, and the people are put through that kind of a turmoil. Mismanagement of fiat currencies is not something new, and unfortunately, I don't know that we'll ever be rid of it. But it's it works well when people are fiscally responsible, and when they're not, we see Iran, Venezuela, Turkey, Zimbabwe, the U.S. for that matter, over time. Look at another example, Bear Stearns, because this is something, and actually Bear Stearns and AIG. So these are both kind of tied to the financial crisis of 2008, 2009, where we had the subprime mortgage crisis. Financial institutions were bundling up uh, uh, swaps and derivatives on bad loans and selling them out like they were wonderful investments to the world, not just to individual investors in the U.S. And Bear Stearns and the IG, for different reasons, got caught up in this mess. And what I just want to raise here, because we just saw it again with the pandemic, okay? The coronavirus pandemic, when the stock market fell on the news of Bear Stearns, when it fell on the news of AIG, when it fell as a result to the orders to stay at home, close businesses, nobody was traveling, et cetera, and worldwide global economies just stopped, came to a screeching halt. In all those cases, what you'll find if you go back and you look is on the day we started taking massive losses, when the market started hemorrhaging, gold and silver fell too. considerably. What you'll also see if you fast forward a little bit is gold was the first to recover, even as the market kept falling down. And what happened in all these cases, if you recall, back then or recently, a lot of people were looking to make money in the market, felt like it could go on for virtually ever. What they were doing is they were using their houses as piggy banks, right? So they were taking money out of the equity in their homes. They were investing it in the stock market. And many times they were taking loans against that money and leveraging what they were borrowing from their home and putting into the stock market. And that is a wonderful scenario to make a lot of money as long as the stock market always goes up. The moment it turns and starts falling, and God forbid, precipitously, what you'll find is very quickly you owe more on the loan than your stock position is worth, and people are calling for margin calls. And when you've leveraged your home, that margin call is serious because it means you could be evicted. So in those cases, people turn to the liquid store of value, in many cases the only liquid asset in their portfolio, gold and silver, a little bit of platinum, a little bit of palladium, but primarily gold and silver. They sell it off immediately, as they should. They meet their short-term needs, and then over time they could start building that gold up again. Also, at the same time, people that are not in those positions, that did not leverage, do not have a margin call, etc., they see gold fall when it shouldn't. When it's fundamentally strong, they see the price go down, they say, aha, a bargain opportunity, and they jump in and they start buying cheap gold. So that's the reason once it falls, gold is usually the first thing to recover. It's the first asset class to come out of a crisis. And we saw that again now. We saw it with the AIG news. We saw it with the Bear Stearns news. We see it time and time again throughout history. And that's an important example because it's what we just went through. I had a lot of people reach out to me early in 2020 and say, hey, how come gold didn't do its job? I bought it as a safe haven. I bought it as wealth insurance and it fell too. And then a week later, they realized, I didn't wait a week to answer them. I answered them right away, but in a week, they were able to see gold was moving back up. It did its job, and now it was recovering faster than the rest, as it always does. So keep that in mind. When I say it's oft misunderstood, that's typically how you'll see it as an investor. And with the pandemic, especially with the stay-at-home orders and the pitch from governments worldwide not to do anything, right? Basically to wait until this passes. We saw a lot of people sell gold too when those orders came out, just because they didn't know how long this was going to last, and they needed some money, so they wanted to take care of those things and have a stash to get them through however long this crisis might last. Okay, moving on. Not every example of gold doing its job is for noble reasons. People may recall back in 2011, as a result of the Arab Spring, Libya was in revolt. Years and years of control by Muammar Gaddafi were being challenged by the revolutionists. And if you recall, Muammar Gaddafi stayed in power quite a while, even though he was under significant pressure from the revolutionaries. The reason for that is kind of an interesting twist. Most countries have their central bank gold. This is their federal government's gold, stored primarily in three places: Zurich, London, and New York. Okay. Muammar Gaddafi did not store his gold in any of those three places. He kept it in Tripoli, local, at home, under his control. And what we found is when the world basically cut off his finances, made it impossible for him to bank anywhere with anyone, he was still able to stay in business, fighting off the revolutionaries because he had gold under his direct control. And he went ahead and he used that gold to barter with friendly neighbors to provide them munitions, food, uniforms, supplies, etc. for his troops. And they lasted a lot longer than they ought to have. Okay, so an ignoble example of gold doing its job, but it was there for Gaddafi in his moment of crisis. If you remember the Asian flu, and I'm not talking about some sort of coronavirus or the bird flu or anything along those lines. I'm talking about the Asian contagion, where basically we saw uh, emerging market countries in the Far East cut ties. I think Thailand was the first to cut ties with being pegged to the US dollar as a result of the, bear with me, I'll get this right, as a result of the Plaza Accord of 1995. So this was the summer of 97, and basically the U.S. dollar was able to appreciate freely against some of these weaker currencies. Actually, it was against, they could appreciate it versus the yen and the German mark, and these other currencies were tied to the dollar, which put pressure on them, so they decoupled. And it had a huge impact, especially on East Asian countries. We saw stock market declines, reduced import revenues, government upheaval, etc. We saw East Asian currencies fall by nearly 40%. We saw international stocks fall by 60%. And there were worldwide repercussions. The one point I want to raise from this scenario, this environment back in the 1997, was one of the first countries to come out of the Asian contagion or the Asian flu was Korea. And it was simply because the people, the citizens, freely gave up their gold to help their government bail themselves out of a bad situation. And what we saw was Korea was one of the first nations to emerge. Next thing I want to talk about, I'm not going to name any names, but I want to talk about a client because, you know, you're saying, Rich, this is wonderful. Okay, so gold is there for the people in Iran and it's there for the people in Zimbabwe, but how does that impact me? I'm a U.S. citizen or Canadian or what have you. I don't have such issues yet. Um, how do I see gold doing its job other than potentially the margin calls, et cetera, in the stock market? We had one client. He wanted to buy silver. And this was probably about 20 plus years ago when we first launched the Perth Mint Certificate Program. So he started buying silver on a regular basis. I forget if it was monthly, quarterly, whatever the case might be. And he did so by pooling funds for him and his mom. And I could tell you back then, his mom really wanted nothing to do with it. She didn't understand it. But she loved her son, trusted her son, and she went along, and they both continued to accumulate silver over time. And fast forward to about 5 years ago, I want to say it was, got a call from his mom, and she was a little distraught at first, and then she was absolutely relieved and incredibly happy because she realized what that silver they had bought meant for her and her life going forward with her son. Her son was in a car accident. As a result of that, he went through about 3 separate strokes. And I want to say it's hundreds of thousands, maybe $1 million in medical bills piled up. And the insurance companies refused to pay out. Why? Because a weak heart was an existing condition. So all these medical bills are piling up, and the insurance companies that they've been paying premiums for years basically turned their back and walked away. And she was able to sell that silver, which had appreciated over the years, take care of those medical expenses, and take care of her son, and make sure that they weren't destitute in the waning years of her life. And you know that's one way that you can have an emergency. It could be medical bills, it could be virtually anything that pop up on you, and gold is there, liquid store of purchasing power for a potential financial crisis you hope you never have. It does work. I've seen it work time and time again, and you know it's worth having. One more story about gold doing its job. We call this the tale of the tales. It is the reason this company was formed. Back in the mid 70s, I think you're aware, Saigon, South Vietnam fell to the communist North Korean or North Vietnamese government. And you probably recall pictures like the one on the screen right here of people clamoring to get on a helicopter to get out of Saigon as Saigon fell. And um, about that time, Glenn and Michael both worked for a company here in DC called Deek Pereira, and they did very much what we're doing now. But I guess Mr. Deek was fairly well connected, and he said, "Listen," he told Glenn, "send a letter to the or make a phone call, I think it was, to the State Department and find out where they're going to put the refugee camps." So Glenn didn't know what he was talking about, but he went ahead and made the phone call. And within a couple days, I think they had a letter saying that Deek Pereira was one of the exclusive conversion agents for gold and currencies at the 5 Vietnamese refugee camps. So this is in '75. And Glenn and Michael were sent down to Eglin Air Force Base. It was one of the 5 camps. And in just a matter of weeks, they saw from 0 to, I think it was like 15,000 people emerge in a tent city of refugees coming over from Vietnam just at one of these camps. And when they flew down there to man the camp, which at first had nobody and then swelled amazingly. They jumped on an airplane. They had a couple $1 million worth of cash in a briefcase and a bottle of acid, and they carried it on and put it between their legs on the airplane on the ride down commercial flight. Obviously, with TSA, you can't do those things today, but the gold or the acid was for testing the gold, and the cash was for buying it. Okay, and we talk about taels, Taels, which is a very thin wafer form of owning gold predominant in the Far East. And they saw a lot of these taels coming out of Vietnam. And there's kind of 2 stories, 2 types of people that emerged from Vietnam in these refugee camps. The first one was a professional business person, whatever, worked their whole lives, saved their whole lives, came down, had 2 suitcases full of Vietnamese piasters. Okay, that was the currency of South Vietnam at the time. And they'd saved their whole life. They'd done good. They've done well, and they had their Vietnamese piasters ready to convert and transfer over and start a new life. The problem is, once Saigon fell and the piaster, a fiat currency, was the promise to pay by a government that no longer existed, how much was that Vietnamese piaster worth? Suitcases full of them. Worthless, zero, zilch, nada, nothing. Um, they had 2 suitcases full of worthless paper that they had worked for and saved their whole life to accumulate, starting over in a new land. Other people had made the conversion. They had turned those piasters in, gotten gold, silver, precious gemstones, etc. They came down with those valuables, those commodities, and they were able to transfer their wealth across borders into the US, start a new life, not in a familiar surroundings. It was still a very strange new place, but they didn't have to go back to square one. They could start where they left off in South Vietnam and continue to ply their trade. So we call that the tale or the story of these thin sheets of gold. It is the epiphany that led to Glenn and Michael starting this company back in 1982. It's an important story for ASI and our clients. So that's the case for gold. If you buy into it and you believe, yes, I ought to own gold in my portfolio, it's important to do so, there are some very, very common mistakes. And I will tell you they can be costly. And I will also tell you that they're magnified in this current environment. You know, I've been here 26 years. Now more than ever, you need a trusted professional to guide you through these waters. I dare say that there's nobody out there better to do that job for you than us here at ASI. But just to kind of go through a few quick, common, costly mistakes. When people first move into precious metals, one thing they don't do first is establish a clear goal. Why are you buying gold in the first place? Is it for profit? Is it for insurance? Is it for both? I would argue that in most cases, it is for both. The client will tell you that they're buying it as wealth insurance, but like any asset, once they buy it, they never ever want to see it go down, even in fluctuating dollar terms, right? So they don't fully get that concept about a store of value and a store of worth and purchasing power, and they want both profit and protection. But you have to think it through and maybe have a conversation with someone to figure out why it is you're buying gold in the first place. Another case is they store it in the wrong place. Okay, um, they a lot of people don't like letting go of their gold once they buy it. I guess this is the best way to describe this. So, I'm a firm believer in storing it close at home. And I'll get into that in a little bit later down the line here. But I believe holding it close at home is usually the first step. And then I like, after a certain point, putting it in the hands of professional. Because here's the thing: if your gold is stored at home, it's the cheapest way you can do so. And then when it's lost or stolen, it's all of a sudden the most expensive way to store your gold. So that's one example of having it in the wrong place. Another example of having it in the wrong place is, let's say you're a European based buyer, and you buy rare US coins and you have them delivered to Europe. Well, there's no market for those, or very small markets for those in Europe, and the huge market and the huge demand is here in the US. So even if you're European based, if you have a desire to buy rare coins, I think you should buy them for sure, but hold them in the US in a depository. So when and if it comes time to sell, you can sell it in the market where the market is. Okay, not from abroad and have to worry about transporting and customs and duties and everything else. Buying from the wrong firm, I think it's self-explanatory, and you'll see it. We're in fledgling bull market in gold, just like we were from 2001 to 2011, and you'll see all of a sudden people popping up to, with greed as their motivation, to get into the gold trade. I think you have to be very careful. You want to go to trusted firms, because there are people out there that let greed take control, not customer service, and they will separate you from your money. They will give you horrific value on something that should be very valuable. Okay. Next one's important to me. Not asking this question first always when buying, and I talk about it in terms of gold, but you can talk about it in terms of buying anything. One of the first things I ask when I'm looking to buy is, when I'm ready to sell, will you buy it back? And I don't want any song and dances. I don't want any explanations. I want to hear yes or no. If the answer is yes, you are a potential candidate for me to do business with. If the answer is no, I will never do business with you. And here's why. Let's talk about an ounce of gold, or a rare gold coin. You'll see these advertised all the time. People will offer prices for them. People buy them. They love the story, etc. But they never ask, will you buy it back? And then they need the money later, and they go back to that same firm and they say, listen, I'd like to sell this back. How much will you pay me for it? And the answer is no, we don't buy back. We don't do that for this reason, that reason. They're all mumbo jumbo garbage. Okay. The reason they're not buying it back, as best I can tell after 25, 26 years in the industry, is one of two things. Either they don't value it at all, so they're not going to pay you a price. And if they don't value it at all, they should have given it to you, not sold it to you. That's probably not the case. What is probably the case is they are embarrassed about the price they charged you when they sold it to you, and the difference between that and the price they can pay you now that you're selling it back. And if they're that embarrassed where they can't give you a bid-ask spread, you probably don't want to do business with them. Okay, so ask that question always first. Please, dear God, ask that question first and always. It'll eliminate a lot of the criminals from your potential dealings. Go through a few of these, and I think these are very common with any financial assets. Buying the wrong products. Again, if you don't know your goal, you're not going to buy the right products to achieve that, or you haven't tapped into someone, a trusted firm that can help you identify the right product to achieve your goal. letting emotions dictate your actions. Emotions have lost more money for investors than probably anything I can imagine. Paying too much, simple. Shop. Make sure we're one of the people you shop. You'll see, we don't promise to be the cheapest price in town, but we promise we'll always be in the ballpark and we'll be unmatched on customer service. Falling for scams, again, if something is too good to be true, seems too good to be true, it is in most cases. Not all, but in most cases. A trusted uh, precious metals dealer is someone who can help keep you out of those pitfalls. And then buying counterfeit coins and bars, they're out there. Whether it be for rare coins or for bullion coins, they are out there. They exist. Okay. The way to protect yourself is to buy from a trusted vendor. Okay, someone who buys from source distributors for the major mints. People like us, they're out there. They're good people doing the right thing for folks, and they don't run into counterfeits for coins and bars because they test them or they buy them direct from the source who make them. So those are some of the common mistakes. I want to look back a little bit last year. Gold absolutely broke out. The one point I want to make about this slide is, well, 2 points. One, make no mistake, we are in the next bull market for gold. Two, this did not start because of the coronavirus. Okay, gold's breakout was in May of 2019. There was no coronavirus in May of 2019, none that we knew about. Okay, so what happened this year is the coronavirus maybe was the catalyst to give this a nudge along and maybe help gold move upward faster than it would have on its own. But make no mistake, it was going up and it was going to be in a new bull market. And that started with a breakout of May of last year. Okay, silver looked like it was going to break out, but it didn't. It fizzled, it whimpered, it backed down. It got thrown in the box with stocks and industry, okay, which is one of the hats it holds. It also holds monetary metal as one of its hats, where gold is primarily a monetary metal. So gold will set the tone. It will move first, silver will follow, and then it will tend to outpace, whether it be to the upside or the downside. So since 2011, when gold and silver hit their last dollar highs, silver went further to the downside than gold did, as it often does. It's got further to come up. And before this bull market's over, just like the last one, it should outpace gold. Okay, so last bull market in 10 years from 2001 to 2011, gold went up 650% in that time period, average of 65% per year. Okay, not compounded, just an average. Silver, same period of time, went up 1,000% because it had fallen further from the previous high, and it went further during the bull market. We expect the same thing to happen again. There are no guarantees, but we fully expect gold to be your leader and silver to outperform as it's a more volatile metal. And what it tells me here is if your purpose is profit, silver is typically my choice, and it is ripe for buying at this time. Gold silver ratio is another way to look at this. At the high, which is 80 or above, today we're at 115, it takes 115 ounces of silver to buy 1 ounce of gold. Anything above 80 suggests a turn, meaning gold and silver have bottomed out. For gold, that was 1,050 an ounce in December 2015. In December 2015, for silver, that was 1,383. Okay, those are the bottoms. They've been in for a while, and they are eventually going to turn and go the other direction to where it will take roughly 35 to 50 ounces of silver to buy an ounce of gold. They will both be moving up in value. Silver will move faster, so that ratio will come down. Three things to do, depending on what your motivation here is with the gold silver ratio above 80. Today, again, 115, okay? What you do is if you're looking for wealth insurance, you buy gold. Your wealth insurance premium is cheap right now, cheaper than it will be foreseeably in the future. If you are in this for profit, you buy silver here because silver fell further and it will tend to appreciate more. Greater potential on a wider pendulum swing. Buy silver here for profit. If you're a trader, what you do is you sell gold here, take the proceeds and buy a lot of silver and wait for silver to come, the gold silver ratio to come down. When it gets back down to about 35 to 50, you sell your silver and you buy a lot of gold. So those are kind of the three ways to play the gold silver ratio. All are in play here. The next slide I want to talk about is the gold two-step, and I started elaborating on this earlier. If you don't have any gold, where do you start? Well, first you call us. We talk about your goals and objectives, etc. But I like to do two things. I like to start by storing some 1-ounce gold coins and maybe a little bit of junk silver. I told you I'd get back to that. Junk silver is a divisible form of owning silver. It's quarters, dimes, and half dollars that were minted in the US prior to 1965. So the year I was born, our money became a lot worthless. Okay, it was worth less than the year prior because we started using alloys, copper, nickel, things like that to fill up that coin, as opposed to 90% silver, which it was until 64. Okay, so junk silver is a divisible way of owning silver. I like a little bit of it for that divisibility, but primarily I want my wealth insurance to be 1-ounce gold coins and bars. Okay, so I start by buying that and I store it typically at home or close to home. I want it to be there, liquid and available if I have an emergency. And I only hold at home how much I feel I need to either meet any foreseeable short-term insurance need, crisis, financial emergency, or two, I hit the point where I no longer feel comfortable storing it and safeguarding it myself. And I told you why earlier, because it's the cheapest way to own or to store gold until it's lost or stolen. Then it's the most expensive. So I want to hold up to a threshold of either need or comfort. And at that point, all the rest of the gold and silver I buy to fulfill my allocation, I want to store in the hands of professionals, whether it be domestically or abroad. And because of my three-legged stool, I want to spread that out too, okay? In the hands of trusted firms that do that professionally and well for a living, okay? Again, you want to spread this out geographically, in terms of asset class, and in terms of currency. In my book, there's one asset that meets all of those criteria of your three-legged stool, and that's gold. It's different from your home currency. It's a diversification in currency. You can store it at home domestically in vaults or abroad in vaults, so you can geographically diversify it. And it's the world's only real currency, in my opinion, but it's also a different asset class from what most people store. You know, 5 to 10% of net worth in gold for wealth insurance. In times like these, a lot of folks will look for another 10 to 15% of investable assets for profit. That's still a very, very small allocation. If you have even 25% of your portfolio in metal or less, the vast majority of your portfolio is in something else. So I'm a gold dealer. I believe in it. I'm passionate about it, but I will tell you, my hope, especially for my wealth insurance, is to buy my gold, hold it, and watch it either fall or stay at the same value, because it means that 90% of my portfolio is doing just fine. Okay. But it's an important 5 to 10%, 10 to 25%, whatever the case might be, that you hold on to in order to take care of your the rest of your portfolio, the rest of your assets, your financial world. Actions to take. I'm going to try to make it easy for you to learn about gold, to reach out to us, and to take action and actually buy some. So for everybody from Escape Artist that comes to us as a result of this webinar, we're going to give a free consultation I want you to email or call, and I'll give you the contact information on the next slide. Mention that you heard us on this webinar, this summit, and we will give you a free consultation. I'll make time in my schedule, and I'll spend as long as I need to with you to help you understand what I know about gold and why you need it. Two, we have ongoing alert service twice a week, one article called Always Something Interesting, ASI. And we have a monthly newsletter we've been publishing for 38 years now called Information Line. Both all of those are delivered via email. They're all free, and all we need is an email address and your name, and we'll go ahead and get that coming to you. If you don't like it, tell us so, and we'll take you off the list. I don't want to send you something you don't want, but a lot of people tell us that this free newsletter is worth every single penny they paid for it. So I think you're going to like it. And then the last thing is for those that came to us as a result of this summit and make a qualifying precious metals purchase, for each one, we will give you a free Silver Eagle. It's not much, but it's a way to incentivize you to do what we know you should do anyway. And I think if we can bribe you, entice you, whatever you want to call it, with a free Silver Eagle to start, over time, you're going to come to love us for what we helped you do for your portfolio. So those are the actions you can take as a result of watching this webinar. I'll leave this up for just a second. It's Michael Checkan, Chairman and CEO. Glenn's not pictured here. Unfortunately, he passed in 2010. But I will tell you, I love the fact that the people on the client relations team that never met him are still uttering his words as they talk to clients today. It does my heart good. You've got myself, Rich Checkan, and our preferred client relations manager, Brian Zweig. Reach out to any and all of us. Our email address, you can see down the bottom, more info at assetstrategies.com. Toll free and direct lines. And I'm sure if you're on this webinar, you're going to get a copy. So if not, reach out and, or ask Mikkel how to get a hold of us, and we'll get this in your hands. And I thank you for your time. It's absolutely my pleasure. I love what I'm doing. I believe in it. And I hope I can help a few of you out there to do what I know you should be doing for your portfolio, especially now. Thank you.
Excellent. Thank you so much, Rich. Those were some really interesting stories. I've read a couple of the stories, The Tale of Two Tales, but I've never actually heard you tell it. So I actually didn't realize when I read it that that wasn't like something that they had heard or, down the line, that they actually went through that and they were actually there on the ground. So that was really powerful.
Can you imagine nowadays flying down on a commercial flight with a bottle of acid and a briefcase full of cash in your lap? It's not going to happen. So.
Well, I really appreciate your time, and that is a very, very generous offer. I hope everybody who has watched today's presentation takes advantage of that. Rich and Michael are very good friends of ours at Escape Artist and mine personally, and are a real trusted source for information. I've even been featured on the Always Something Interesting newsletter, and Rich has been nice enough to create and curate some content for my newsletter as well. So very trusted partners, and I hope that everybody was paying really good attention, took lots of notes, and will take Rich up on that offer. Rich, thank you so much for your time, and I will talk to you soon, okay?
Thank you, Mikkel. It's my pleasure.